Okay, yep. Hi everyone. Thanks for joining us tonight for our Market Watch episode 16. So tonight, very interesting topic today is actually a part two of our last week topic, which is actually how can anyone actually achieve financial freedom in 10 years? And of course, last week I have actually shared with you that it is definitely possible using the 2515 framework. All right, so for those of you who are here last week, can you just type in the four numbers that we have actually shared last week? If you have heard our sharing last week, can you just type in what is the four magic figure that we have actually shared? Okay, what is the four magic figure? And for those of you who are here, okay, you can just type in hello so that I know that you are actually watching this. Okay, hello Han Hop. All right, good evening. And let me see who else. Yes, thank you so much, Irene. You got the correct answer. Okay, 2515. That is the magic 4D number that I've given last Sunday. All right, thanks so much from Kelvin as well, Han Hop as well. And yeah, let me see. Let's get a little bit more response. Thank you so much, Albert. So what exactly is this 2515? All right, so I mentioned that in order for you to become financially free, you need to save and invest at least 25% of your income, okay, every single month, and then go and invest it. And the return that you need to generate from your investment is super important. Okay, so imagine you save 25%, but you are just putting them inside the bank, or you are putting them into a fixed deposit that's giving you like 1%. That is not going to help you to reach your financial freedom. I mean, maybe one day you will reach there, but maybe that's like 70 years, 80 years later. So the number 15, okay, is super important because the return that you want to generate, okay, from your investment is 15% every single year, okay, compounded lah. So now, okay, I think I was actually leaving you guys hanging down there like, okay, so Bowen, you mentioned 25% invest and I need to generate 15% yearly. So how can I achieve 15%? I think this is the magic question, or the I don't know, this is probably the biggest stone that is in your heart right now. So that is where today I wanted to share with you this particular sharing that I have. So with that will basically explains everything, okay, that you have, okay, all the doubts that you have. So that is basically our key topic for today. So like I said, today very interesting. Yeah, so please help us to like and share this video out, this live out, so that your friends and families will be able to watch this together with you as well. All right, let me see who is here. Teresa, yes. Eve here. Bonnie, Quenston, Liang Xia, and Bing Song. Okay, hello. For those of you who just came in, yep, say hi so that I know that you're actually here. So today, very exciting. Okay, so now it's about 9:05. Okay, let's just wait for about 30 seconds more, okay, before we actually get started. Okay, so that more people can actually join in. Okay, Lawrence is watching as well. That is perfect. Okay, anyway, today, I think today we can go a little bit longer. Reason being because tomorrow, I believe most of you are, okay, you are not working. Tomorrow is our public holiday. Yeah, we are supposed to celebrate our National Day tomorrow, but unfortunately, there's no show. So that's good. We can still enjoy our public holiday. Yes, nice to see you live online. Yes, you will see me every Sunday at 9 p.m. Okay. All right. Let's get started. So this is going to be my key sharing for this evening. Okay, for my Facebook Live. So first thing first, okay, I'm going to just dive to the biggest stone out there. What is the science to generate 15% ROI annually? And then secondly, I will still run through our short-term market direction. And last but not least, we will have our Q&A. So for today, basically, I know that previously I've been sharing about some of the opportunities out there. But today I'll just leave it everything to the Q&A because I understand during the Q&A segment, many of you will still ask me about companies. So that is where I think I will share with you my personal view if there's any opportunity. But listen to my short-term market direction first. Okay, today I think is a pretty important session as well. So I'm going to share something really important. So make sure that you actually stay all the way till the end, okay? Because today's sharing is really, I would say, very critical. Very critical. I'm going to share with you very critical information for today. Yeah, and of course, before I go on, very importantly for me is to share the disclaimer. So whatever I share with you today is purely based on my personal advice, right, and my knowledge. So make sure that you do your own due diligence, do your own research. And of course, understand that, definitely investment comes with risk. Okay, so the first thing I want to show you is I have these three company over here: Apple, Google, and Berkshire Hathaway. Okay, so I have also listed down the share price over there. 146 for Apple, 2714 for Google, and Berkshire Hathaway $430,000. Okay, this is the share price. Just in case y'all are wondering, did I put the wrong price? Okay, I didn't put the wrong price. That is the price for one share. Okay, that is the price for one share. So looking at this company, okay, let me ask you guys, okay, if you were to be able to go back 10 years, okay, 10 years time, so we do a time, we reverse time, okay, let's go back 10 years ago, and you were given the opportunity to invest into these three company, which one would you actually choose? Type in A if you go for Apple, type in G for Google, and type in B for Berkshire Hathaway. So A for Apple, G for Google, and B for Berkshire Hathaway. So I repeat, if you were to go back 10 years ago, okay, you were given the opportunity to invest in any of one of these company 10 years ago, which one would you go for? A for Apple, G for Google, and B, not C, okay, A, G, or B, A, G, or B. So Qing Yang, please help me to retype. I don't know what C. C for I don't know. Okay, so we have A from Kina, and then Peter say B, Liang Xia put A. We got a lot of A and B, a lot of A and B. Nobody, y'all don't like Google. Okay, Bing Song put Google, Han Hok put Google. Okay, then Kevin, Melissa. Okay, wow. Okay lah, I think quite interesting. Quite a number of you actually chose B, which is Berkshire Hathaway. So why am I showing this, right? Actually, first thing first, there's a few reasons why I wanted to actually put in such a wide differences in terms of the share price. So first thing first, let's have this agreement now, okay? Or rather, I mean, pretty much for those of you who are invested in the stock market, you will definitely agree that all three companies are great companies. So whether I invest into Apple or Google or Berkshire Hathaway 10 years ago, pretty much all of them would actually make me pretty decent profit. Okay, pretty decent profit. But one thing why I wanted to show the difference between Apple, which is 146, and Berkshire Hathaway at 430,000, it is really to show you, first thing first, that the share price, there is no limit to how high a share can actually go. Okay, there's no limit to how high the share price can actually go, especially for those of us who started investing into the local market, okay, mainly in Singapore. We always have this, I'm not sure how we get this mindset or teaching that whenever the price hit a certain price, it becomes harder to go up. Okay, so it's like, for example, Apple is now 146 now. So people will say that Apple, once it reached 500, then that's the limit. Or maybe when it reached $200, that's the limit. Okay, and even for Google, they say, wow, 2,700 already so expensive. I think at most it will go to $3,000. All right, but I just wanted to show you the comparison now. Okay, Berkshire Hathaway is 430,000, and if you compare Apple at only 146, can you see that actually the room to grow is actually a lot higher? Okay, the room to grow is potentially higher. Or rather, I just wanted to put in a way that there is actually no limit to how high the share can actually go. Okay, how high the share can actually goes to lah. All right. Yes, Google already give me 60% return this year. Wow, amazing, Jackson. That's why you choose G. Okay, that's the first thing I wanted to share with you. Just remember, the stock price, right, has no limit. Don't put a limit to how high the share can actually go. So later, I'm going to share with you two main reasons, okay, why the share price will go higher. So that one you have to listen up. Okay, I'm going to show you the science, how to generate 15%. And I wanted to show you this example using Apple. Okay, so some of you will be wondering, wow, how come Apple price is so low? Okay, how come the share price of Apple is so low? Actually, the reason for the share price being so low is because Apple has actually done this thing called a stock split. Okay, so as you can see, Apple actually throughout his history, they have actually splitted 5 times. So in August 2020, which was last year, they actually had a 4-for-1 split. So what does this mean? So if let's say previously you have one share of, that means before 2020 August, let's say you own one share of Apple. Okay, so at that point of time, maybe the share price of Apple is at $800. So what happened is that after the split, right? Okay, the share price from 800 would actually drop to $200, right? But what happened is that instead of having 1 share, now you actually have 4 shares. So can you see, previously you have 1 share of Apple at $800. So what is the total value? The total value is $800. But right now, after the split, the share price actually dropped to 200. But you have 4 shares. So the total amount that you have is basically still 800. So can you see that actually there's no difference to you as an investor? But what happened is that just by doing this stock split, the share price can actually becomes much smaller in number. All right, so some people have this impression that while Apple, the price is so low, it is very undervalued. Berkshire Hathaway is so expensive, it is very much overvalued. Again, that is not true. That is not true. We don't look at it from this way. So you can see, other than August 28, 2020, previously they have also a 7-for-1 split, 2-for-1 split in 2005, 2019, 87. So if you look at this example, right, let's say in 1987, that means during this period of time, or before, okay, you invested $100 into Apple. That means you put $100 into Apple. At that point of time, okay, the share price of Apple was 0.35. Okay, so which means that with $100 and the share price of 35, you would have owned 285 shares. So what happened is that after all the split after the 5 split, right, what happened now, if you actually hold on to all the Apple share until today, okay, instead of just having 285 shares, you now actually own 31,920 shares of Apple. And based on the current price of Apple at 146, can you see that the value, the total value of Apple from $100 in 1987 today is actually worth $4.6 million. If you think this is amazing result, can you just type in WOW? If you think this is super good result, can you just type in WOW? All right, I think it is pretty amazing. And of course, some of you are wondering how come you are not a millionaire in today's context, right? Okay, it is not your fault. Okay, you can actually ask your father or your grandparents why they didn't buy an Apple share back in 1987. Just tell them, you know what, had my akong spent $100 to buy Apple share, you know, when I was born, today I would have been a millionaire. Okay, not just 1 million, you'll be worth $4 million. Okay, very interesting. All right. So now, again, when we look at this example, right, I know a lot of you in your mind is like, yeah, this is over already, you know, like I didn't manage to invest into Apple, my father didn't buy into Apple, my grandparents didn't buy into Apple, so it's too late for me. All right, but actually, if you break down, how do you actually grow $100 to $4.6 million, right? Using this compounded, or rather we call it a financial calculator. So you can see the initial deposit is $100, and over the time span of 33 years, you realize that in order for $100 to become 4.6 million, okay, it seems a bit crazy, or almost impossible to grow it again, right? Okay, but if you look at it, actually the yearly returns that you need to achieve is 38.5%, which means that if you are able to find an investment that generates 38.5% every single year, and you just compound it with $100, okay, so your 100 will grow to become 138.5, and then compound another 38%, it becomes more. For 33 years, actually the $100 will become 4.6 million. Okay, so can you see right now? Okay, remember what I wanted to show you is how do you actually generate 15% every single year. Okay, but right now you can see just by investing into Apple and holding it for 30 over years, actually the yearly return that you are able to generate is around 38%. Okay, so remember the first thing, what I want you guys to achieve is, I would say it's not a crazy number. So 15%, like I said, is only half of this. Okay, so it is definitely doable. All right, but don't worry, my answer for you guys is not to invest in Apple. I'm going to show you more in depth. But what I wanted to illustrate to you is that if you just look at the numbers itself, 100 to 4.6 million, a bit impossible to achieve. But if you actually break down using this calculator, you realize that, hey, actually 38% may be doable. If I break down, okay, what I want you guys to achieve is just 15% every single year. Do you realize that it is actually very much doable? Okay, very much doable. All right, so over here, I just wanted to share with you 2 key reasons why share prices actually goes up. Okay, although it sounds a bit simple, but a lot of us actually don't really understand at the end of the day why share price goes up. 2 main reasons. Number 1 is because the business earnings has gone up. Okay, if you look at all these companies that I've mentioned earlier on, Berkshire Hathaway, Apple, and Google, has their business earnings go up over the years? The answer is definitely yes lah. Okay, and the second main reason is that the stock multiplier for this company actually increased. Okay, so these are the two main reasons why a share price can actually go up lah. So they can actually work hand in hand. That means both go up together. Or if one of them goes up, okay, the share price can also go up. Okay, so assuming that business earnings remains the same, but the stock multiplier actually becomes higher, the share price can also increase in value. Okay, so later I'm going to explain a little bit more on this, but these two very, very important. Okay, very, very important. So to illustrate to you that what I've just mentioned is the truth. Okay, is the truth. If you look at Apple, can you see that over the years, okay, based on this earnings per share, how much profit they are making based on per share? Can you see over the years from 2011 to 2020, okay, to the latest figure, can you see that this number has been increasing over the years? So I'm not lying to you, right? That when the share price goes up over the years, it's because the company is making more and more profit. Okay, so this is the truth. So I want you to also remember this figure. Okay, right now, the earnings per share for Apple is actually 5.12. Can you just type in 5.12? Okay, because I want you to remember this number. So type in the chat 5.12. Okay, so the second reason is because the stock multiplier of Apple has also increased. So we can actually see over the years, okay, from 2014, we are looking at this multiplier called the PE ratio. Okay, the PE ratio. So in 2014, the PE ratio or the multiplier was 7. Then it jumped to 11, jumped to 13, jumped to 18, 13, 24, 40. And right now it's actually at 28. Okay, so you can see the multiplier is actually a bit more fluctuative. It's a bit more fluctuative. But if we were to compare the average, can you see that actually 28 is a pretty, I would say it's not the highest number, because in 2020, actually is even higher. So right now at 28, I would say that it is somewhere, okay, above average, above average in terms of the multiplier. Okay, so I wanted to point out to you, right, this magic formula. Okay, this magic formula. So before we go to the science of why prices go up, okay, before we go to the science, let's go to look at some of the math first, okay. So I want you to help me to type in this number also, 28.54. I saw that a lot of you have typed in 5.12, which is perfect, okay. So thanks for helping me to type in. So I want you to also type in 28.54. 28.54. And for those of you who are a little bit faster, right, just do me a favor. Can you help me to take this 28.54 multiply by 5.12? Okay, you take 28.54 multiply by 5.12. And then you help me to type in the answer also. Help me to type in the answer. 28.54 multiplied by 5.12, because this is really the secret, okay, that a lot of people didn't realize, but this is basically the most important part when it comes to investing in the stock market. Okay, so like I said, before we go to the science, let's look at the math. Okay, thanks Han Hock. Wow, very, very fast. So I'm sure in math, we have actually learned this formula before. Okay, A times B equal to C. Okay, I know some of you will say A times B equal to AB. Okay. Okay, but let's assume that A is a number, multiplied by B will give me another figure. Okay, so if let's say today, I want to increase C. Okay, let's say today I want to increase C. Can you help me to type in what can we do? What can we do to increase this C? I'm going to just wait a little while, because this is something very, very important. I want you all to actually tell me the answer. In what scenario will my C increase in value? And I'm going to put up some of the answer that you all have actually typed in. How can I increase C? Anyone? Oh, nobody. Okay, fantastic. Thank you so much, Peter. Okay, so Peter actually mentioned either you increase A or B. Okay, Liang Xia also mentioned either the A goes up or B goes up. Okay, and in some scenario, okay, thank you so much, Colleen. Or both, increase either one, or if you increase A and B to be higher, C will also go up. So I hope y'all realize right now, right, what exactly is C? Okay, C is basically the share price. So what is A? A is basically the business earnings. So can you see earlier on, right, the example that I gave you, okay, for Apple, the business earnings, the number was actually 5.12. Okay, for Apple, the earnings earlier on was 5.12, and the B for Apple, the multiplier was actually 28.54. So if I multiply just now that two prices together, can you see just now my C was actually the Apple share price. So basically, I took the earnings per share, multiply by the multiplier number of 28, I will get Apple share price. So if today I want Apple share price to go up, that means I want my C to go up. So the first scenario over here is A go up lah. Okay, that means if Apple were to make more money, okay, let's say Apple instead of 5.12, now the Apple goes to 6. Okay, what is the share price of Apple? Can you see? Basically, you just take 6 times 28, the share price will become a bigger number. So can you see that? Okay, assuming that the multiplier remain the same and Apple actually makes more money, okay, what is going to happen to the share price? The share price will increase in value. Or in another scenario, like what you guys mentioned, assuming that Apple, the earnings remains the same, so the company never make more money. However, the multiplier effect for Apple actually increases. Instead of 28, now maybe it goes up to 30. Okay, can you see that 30 times 5, the number is also larger. So the share price also increase in value, okay, when the multiplier increase. And of course, we also know that if let's say both the share price, okay, both the company make more money plus the multiplier increase, then the share price will go up even more lah. Okay, that's the perfect scenario. Okay, that is the perfect scenario. If you understand what I've been sharing with you so far, can you just type in ABC? I hope what I'm sharing with you is very straightforward, as easy as ABC. If you understand what I've been sharing with you, just type in ABC. Right, and of course, before I forget, okay, please help us to like and share, okay, this live so that more of your friends and your relative lah, okay, can actually see this as well. Okay, fantastic. I'm glad that you guys understand what I've been talking. Okay, nothing too fanciful. This is just basic mathematics. So now we want to come to the science of it already. Okay, we come to the science of it. Okay, so when we talk about science, we talk about color lah. So just now I mentioned the yellow color is basically the earnings. Okay, how much money the company is making. The blue color is the multiplier. So when I take yellow color mixed together with blue color, what color do I get? Blue plus yellow. Okay, I get green in color. Okay, so green stands for the stock market will go up lah. Okay, so when the company is profitable plus the multiplier is there, then the stock market is green, okay, which is my backdrop. Okay, green in color. Fantastic. I love this color. So what happened when the company makes even more money? So now I have 2 blocks of yellow plus the same amount of blue. Can you see that actually the total amount of green that I get is even more? So now the share price goes up lah. Because why? Because I added in more yellow, which is more profit. Okay, assuming that we have the same multiplier, overall, okay, it will still be even more greener. But if we look at this particular scenario, a little bit special. So assuming that the company profit remains the same, but the multiplier actually goes up a lot. Okay, the multiplier goes up a lot. So on my screen, okay, it actually shows you that, okay, it is still green in color. Okay, it is still green in color. But let me ask you this important thing. If you look at the company profit, is it possible for a company to make more and more money year after year? Let me ask you, for example, if you look at Apple, do you think Apple for the next 10 years, they will continue to make more profit? If you think the answer is yes, type Y. If you think the answer is no, type N. Okay, I'll repeat the question. Okay, how many of you think that Apple will or can continue to make profit over the next 10 years? If you think it's possible, type Y. Y for yes. If you think it's not possible, type N. Apple continue to make more profit. Okay, I didn't say the amount, but more. Okay, yeah. So yes or no, yes or no. Okay, yes. So Qing Yang put Y. Wow, fantastic figure. Okay, Irene also put Y. Han Hok also put Y. Okay, yeah, well, the rest don't know. The rest still thinking. Okay, this is not a trick question now. Okay, but pretty much, okay, I would say that for Apple, I believe that they will still continue to grow easily for the next 10 years. Wouldn't be an issue. If you actually go and read their product lineup, I do see that they can continue to make profit over the next 10 years. So that is the good thing about this yellow color. Can you see that the yellow color, okay, as long as the company is doing right, okay, as long as the company is still growing, this yellow can become bigger and bigger. But what about the multiplier effect? Okay, what about the multiplier effect? So you realize one thing about the multiplier effect, right? It is basically based on market sentiment. Okay, so if let's say market is very, very bullish about this particular company, this multiplier effect will be much bigger. Okay, and then when the market is very, very fearful, let's say during a market correction or when there's COVID, for example, last year when there's a big drop in the market, okay, what happened to the multiplier effect? Okay, the multiplier effect actually dropped significantly. So one thing you will realize about market sentiment or the multiplier effect is that it doesn't really goes up forever. It always goes up to a certain range. So it would actually go up and down based on market sentiment. Okay, it will go up and down based on market sentiment. So what happened in this particular picture, right, as you can see, okay, is that the market sentiment, once it reach a certain point, there will be a breaking point whereby the market sentiment will start to go down. Okay, and when that happens, okay, if let's say you manage to buy into the stock market when the market sentiment is really, really high, what is going to happen is that subsequently this yellow green color will actually become red in color. So you will actually lose money when you actually bought when the multiplier is very, very high. Okay, I hope this one y'all can understand. So let me just summarize a little bit for you guys. Okay, so in order for the share price to go up, in short, I would actually put it into these 2 points. Number one is the company and the business earnings must continue to grow. Okay, so when you invest in a company whereby the earnings is pretty much stagnant, okay, I'm sure a lot of Singapore company is like that the business is stagnant one. Okay, so can you see for a company that is stagnant, how can the share price goes up? Based on what you all have learned so far, can you all just type it? Assuming that this company, the earnings never change one, okay, already stagnant already, but never drop okay, remain the same. In order for the share price to go up, what must happen? Okay, so pretty much very simple, right? The market sentiment has to go up okay, the multiplier effect has to go up. So again, this is not something that you can actually foresee one, because market sentiment is a lot based on a lot of condition. For example, inflation, for example, the virus, for example, the economy, for example, the government stimulus. So there's a lot of factor, okay, affecting this market sentiment. Okay, so when you invest in a company whereby the earnings is not going up, okay, it's flat, you realize that it is a lot harder for you to determine whether or not the market sentiment will go up or not. Okay, as compared to if you invest into Apple and you know that every single year, even if let's say the market sentiment remains the same, okay, assuming that the B, remember we have A, B, C, assuming that the B remains the same, but A continue to increase every single year. Okay, can you see over a period of time what is going to happen to the C, which is the share price? Naturally, the share price is going to increase in value as well. And that's how you actually make money when you invest into the company where the earnings increase, the multiplier remains the same, okay, the share price will go up. And the second thing is also very, very important. Okay, that is more relative to the multiplier. So you want to buy, right, when the multiplier is lower than its 5-year average. Okay, lower than the 5-year average. So just now when we look at Apple, you realize that Apple, the average used to be like 7, 10, 15. Okay, right now it's at about 28. But there is also a year whereby it reached 40. Okay, so I would say that the range of Apple can be between 10 to 40 okay, 10 to 40. All right, so I would say at 28 it is somewhere on the maybe slightly on the higher side. Okay, slightly on the higher side. So if let's say subsequently Apple continues to go higher, the multiplier continues to go up to let's say 35. So you realize that if you bought at 35, okay, what happened is subsequently if the multiplier dropped to 20, you realize that you will lose money even though for Apple, they might be making more money from the A. So A increased, but because your multiplier effect is on the higher side, then what happened when the multiplier drop? You will also lose money. So very, very important. What we want to do is, let's say for Apple, between 10 to 40. Probably you want to buy when it is around 10 plus. Okay, maybe 15 to 20 lah, somewhere around that range, still not so bad. Okay, so you make sure that the 5-year average, you want to buy lower than the 5-year average. Okay, so this is the benchmark. Very, very important. All right. So, did y'all manage to catch something from here? Actually, I shared with you something very, very powerful already. Okay, so can y'all tell me what is the 2 key things that we must look out for in order for us to profit from the stock market? What is the 2 key things? So we do a little bit of refresher. Anyone, just type in chat. What is the 2 thing? What is the 2 thing that I just shared with you? Okay, fantastic. Okay, so make sure that you invest in a company that is increasing in earnings. Okay, that is increasing in earnings. And of course, the multiplier, we want to buy it when it is relatively lower. Okay, yeah. So EPS and PE ratio, fantastic. Earnings and multiplier. Okay, although it sounds really, really simple, right? But I can tell you that, okay, there's a lot more to it. There's a lot more to the science of it. So remember, we earlier on in our last episode, we talked about how do you actually generate 15% every single year. Okay, how do you generate 15% every single year? So now we just look at Apple. So if you look at Apple, right, actually on a year-to-year basis, the Apple growth rate, right, that means the company is actually growing somewhere in the range of, I would say, in the range of 30%. Okay, 30%. So which means that, can you see that the number, the A, right, the A for Apple is actually increasing 30% on a year-to-year basis. Okay, 30% on a year-to-year basis. So assuming that the multiplier of Apple remains the same at 28. Okay, so A goes up by 30% next year. B remains the same at 28. Okay, what is going to happen to C? Can you just type in? How much do you think the share price will increase 1 year later for Apple? Very, very important now. I hope you all get what I'm trying to share with you right now. So assuming that, okay, Apple earnings go up 30%, but the B remains the same. What is going to happen 1 year later for Apple is that the share price would actually increase 30% as well. Okay, the share price is actually going to increase 30% as well. All right. So in order for you, like I said, in order for you to actually grow your portfolio at least 15% on a year-to-year basis, like I said, the first thing you want to look for is you want to invest in company that has the track record to grow at least 15% every single year. Does it make sense or not? Okay. That means I want the A, the number A, the alphabet A, right, to increase every year, increase by 15%, 15%. And assuming that B remains the same, right? Can you see that my share price will actually increase by 15% every single year as well? Okay. And of course, the best case scenario is what happens if, let's say, my B also increase. So as my A increased 15%, my B also increase another 15%. And that is where you will see that your C will increase even more than what you expected. Okay, which is even better. Okay, but like I said, remember for the B, right, which is the multiplier effect, okay, there's a limit to how much it can grow. So whenever the multiplier reach a certain high point, okay, based on the 5-year average, okay, you might want to consider taking some profit. Okay, taking profit. Okay, so let it drop and then you re-enter again. Okay, as simple as that. Okay, so A continue to grow. So for A, right, basically, when you invest in a company, just make sure that the company is making more and more profit on a quarterly basis. That's the only thing that you need to do. The second thing is, whenever the multiplier is on the higher side, you can take profit. You run first. Okay, and then what happens is after that, you have a lot of cash, right? Wait for the multiplier to drop below its 5-year average, and then you buy again. So you can see after that, when it goes up, can you see you will be making good profit just by doing this again and again and again, right? So that is basically the whole formula all about. And I'm going to combine it together with the short-term market direction, and then you will be able to have a better understanding on, why am I sharing this today? So right now, I'm going to share with you about the short-term market direction. So I would say that I have been repeating this many times over the last few weeks. Okay, nothing much has changed except that today I'm going to give you a little bit new insights. Okay, so that y'all can actually start to think about it based on what I have just shared with you earlier on as well. So for my short-term analysis of the market, okay, I would say that market will still remain bullish. Okay, nothing has changed. I have been talking about the market being bullish for many weeks. Okay, and you can see that the market right now is pretty much at an all-time high. Midterm wise, I do foresee a major correction coming. Okay, I do foresee a major correction coming. So I know a lot of you later will ask me, so Bowen, what is midterm? Okay, the question is, if I know exactly what is midterm, or like I can tell you, okay, 3 months later, about 91 days later, the market will crash. Okay, if I know that, right, okay, then I think you all need to you need to put fruit. You all need to give me some fruit really. Okay. So no lah. There's no way I can predict when exactly the major correction will come, but I can tell you why there will be a potential correction coming. In fact, I can pretty sure that it will come. Okay, it's just a matter of when. So, okay, let's look at the earnings. Remember, we always look at these two criteria. One is the earnings, one is the multiplier effect. Let's look at these two from an overall macro point of view. Okay, macro point of view. So we have seen news like this. Earnings season has been great with profit margin holding up in the face of inflation. So based on, I think this was about, let me see, July 23rd. That's about 2 weeks ago. Okay, 2 weeks ago. Okay, we know that right now we are at earnings season, right? Okay, so 2 weeks ago, the earnings season just started. So they have actually said that overall earnings are now expected to grow 76% year over year for the period. So which means that overall, based on most of the earnings, okay, actually they are expecting a 76% growth. So that means the A, right? The A that we see just now, they are expecting it to grow by 76%, which is pretty crazy. Okay, so as you can see, based on this Refinitiv, I hope I pronounce it or Refinitiv. Okay, this is the best growth since 2009. Okay, this is the best growth since 2009, which means that I would say that definitely the market can continue to grow more. Okay, the growing part is good lah. It's good lah. I would say the economy is doing well. Company is making more profit. Okay, so the alphabet A is okay. It's doing well. So that is also why the stock market is so expensive lah, because the overall earnings of the company are all doing well. But what is really critical, okay, to me in the current perspective is the number B, is the alphabet B. Okay, so B is the multiplier effect. So this is basically the multiplier effect of the whole S&P 500. Okay, which is the index that we always look at, okay, the S&P 500. So can you see over here, okay, right now this multiplier effect for the S&P 500 is at 38.54. I know 38.54, you don't really have a guideline like what is 38.54, okay, it's just a number. But I can actually tell you, right, the last time, okay, the multiplier effect was higher than this was actually during the dot-com bubble. So that was about 44, okay, around 44. The multiplier effect was 44. But other than that, can you see that right now pretty much our multiplier effect was actually the second highest in history. Okay, in history since 1880s lah. Of course, anything before that I don't know lah. Maybe the stock market not even created yet. But at least from 1880s all the way until today, okay, the multiplier effect is pretty much the second highest, which also means that at any point of time, if let's say this multiplier effect were to drop, what is going to happen to the stock market? Can you all tell me? So like I said, the multiplier effect won't go up forever one. Okay, like even the year 2000, it goes to 44 and then it goes all the way to about 22. So can you see that's like a 50% drop. So when the multiplier effect, just look at the math, okay. So let's say previously, right, is 10 times 2 equal 20. Correct? Okay, basic mathematics, 10 times 2 equal 20. So right now, instead of 10 times 2, the 2 become 1. So 10 times 1 equal to 10. So 20 drop to 10. That's like what? A 50% drop. Okay, a 50% drop. So can you see? Same thing. Even though, yes, I know that the company earnings is making more and more, which is like I said, the A is great. Okay, company is making more and more profit. But the B is something that I'm very, very concerned about, which is the valuation, the multiplier. Okay, so if the multiplier were to drop to, okay, let's say 17, or later I'm going to give you a figure. What's going to happen is that there will be a huge dip or dive in the stock market. Okay, so like I said, overall, just to summarize, the business earnings is going strong. So A is still growing, which is fantastic. Okay, yeah. But what is concerning in my perspective is actually this stock multiplier is already reaching the all-time high. Okay, so if this were to drop by half, what is going to happen to C is C will still be affected pretty much lah. So now the next thing that a lot of people will ask is, okay, so Bowen, let's assuming lah that the drop happened. Okay, the drop happened. The multiplier effect actually happened. So how low can the market fall in the next crisis? Okay, how low can the market fall in the next crisis? So I have this analysis, okay, or forecast lah. Okay, and let's assume that A remains the same. Okay, let's assume that A remains the same. And I can actually tell you that just now, based on the growth rate of 78%, that one also not accurate, lah, okay, because they were actually comparing to last year. Okay, so we know last year was actually COVID. Lah. So if you compare COVID, whereby everything was shut down, to now, then of course the growth is a lot higher. Lah. Okay, but yes, I would say overall company is growing, but definitely not at 78%. Lah. Okay, it's not growing at 78%. Okay, so let's assume that, okay, the business remains the same. Lah. Of course, we know that right now, there's actually still a lot of things going on. So let's assume that business growth remains the same, but the number B, the alphabet B actually fall from 38 to 15. So that's almost like a 60% drop. Okay, so what is going to happen to this alphabet C? Can you actually see? C will drop by 60%. So this is just basic mathematics. Lah. Okay. So A remains the same, B dropped by 60%, C will also drop by 60%. So which means that based on the S&P 500, now it's at 442. If it were to drop 60%, it will be at about 175. Okay, at about 175. So now a lot of people will be concerned, wow, jialat lah. If I buy now, then it drops 60%, how? I have to sell house, sell car, sell everything. Okay, sell, I don't know. Okay, so why people always say that, in the long run, the stock market will always perform well is because, like I said, okay, the multiplier effect is fluctuative. So which means that when it drops to 17, slowly it will starts to go up to 18, to 19, to 20, to 21, to 22. And when that happens, what is going to happen is that the stock market will start to recover. Okay, and don't forget, okay, let's assume that the company will continue to still grow. Okay, just now our assumption is A don't grow. But assuming that A will continue to grow, business continue to do slightly better, okay, so what is going to happen is that the stock market will start to recover over time. It will definitely take time, okay, but then if you look at it 10 years later after this massive crash, you will realize that, wow, by then maybe the share price goes up to 600, 700. And then you look back, okay, it will look something like this. It's just a dip. But at this point of time, it looks scary. Okay. At this point of time, right, it was super scary. But now you look back, you're like, I should have just hold on to it. Then now I will be making a lot more money. So basically, like I said, okay, a market crash will happen. Okay. And I hope it happen sooner. I hope it just happen. Okay. But when will the multiplier effect drop by 50%? Anytime. Okay, to be honest, I can tell you that anytime. Okay, but I would say right now, maybe we just wait a little while. Okay, as it goes closer and closer to the 44, maybe the risk will become higher and higher and higher and higher. So again, like I said, 38 is already very high. Okay, so that's why I say that short term, I do believe that the market can continue to push even higher, especially right now where I think the stimulus is still ongoing, but many places already reduced. But then do be careful, okay? As long as the multiplier bubble start to burst, right? Okay, I can tell you that the stock market will take a huge plunge. And like many people have actually mentioned that, okay, the crash last year, because of COVID, right? That one is actually a one-off event. Of course, we know it's because of COVID. So last time we said that the drop was 20%, so that is considered a correction or market correction. So the next correction should happen 10 years later. Okay, we have heard of this saying, market will correct every 10 years. So people will say, last year already corrected. So right now, I don't think the next one will come so soon. Maybe another 9 years later. Okay, but I would say not true. Okay, in fact, if you look at the kind of recovery that happened, I would say that the COVID was really a one-off event. Okay, I wouldn't even classify that as one of the major crash. Okay, which means that I do foresee the next big crash is probably coming anytime soon in the midterm. Okay, please don't ask me when it's midterm, right? So like I said, okay, bearing this information in mind, okay, are there any opportunity or not? Okay, the answer is definitely yes lah. Okay, the answer is definitely yes. Okay, so a lot of people knows that you can make money, when the stock price goes up lah. So you buy low, sell high. But what a lot of people didn't know is actually you can also do the opposite. You can sell high and buy low. Okay, I'm sure you have heard of us saying this, that you can actually make money shorting the market as well. Okay, shorting the market as well. So like I said, okay, please, I'm not going to short the market right now. Okay, but we just need to be prepared lah. Okay, you need to have the knowledge that when the thing starts to drop, okay, do you have the knowledge to actually short the market? If you know how to short the market, right, the good thing is while it dropped, your bank account continue to make more money lah. Okay, I think that is something that we want. So while everybody is panicking, everybody is losing money, your bank account continue to grow in value, and the bigger the drop, the more money you make. Okay, so that's exactly what we want, to be able to make profit irregardless of market going up or whether it's the market going down as well. Right. So I just wanted to share with you some additional resources, okay, whereby we will be sharing with you a little bit more on how to actually do it. Right. So of course we won't be able to share everything today, lah. That's why today I'll just keep it short. But tomorrow, is it tomorrow? Oh no, sorry. 2 days later, on Tuesday, right? I'm actually going to conduct this crisis income formula webinar. So this is just an advertisement time for me, lah. Okay, for our company. All right. So it will happen Tuesday from 8 p.m. to 10 p.m. So if you have not attended this before, okay, please do attend, okay, because I'm going to share with you exactly what is shorting the market, and I'm going to show you, okay, like what I mentioned over here, how to make profit even when the market goes down. And I'm going to show you about this thing called the 30 days investing challenge. And for existing investor, if you are not seeing profit consistently because you are actually missing out a certain system, I'm going to share with you the exact system that we do as well, okay, in this particular formula. So make sure that you save your date, okay, and then join us on this particular day. And of course, last but not least, okay, one more quick advertisement before I go to the Q&A. Okay, is that right now, of course, today is 8/8 lah. So today is the best day to shop, right? So of course, we also have a special promotion for you guys, okay? But again, I'm not going to share with you what exactly is the promotion, okay? But in short, this is our flagship program lah. It's a 2 days trend investing masterclass. It's going to happen on the 21st and 28th of August, right? So you have seen some of our reviews, okay? Yeah, team is the second investment course I attended, and it will be my last because I have found the right one. Wow, fantastic. Okay, thanks Shuning for the wonderful review. All right, the course content includes simulated trading atmosphere to let learners feel the up and down, anxiety, uncertainty of trading in the stock market. Help me to prepare my mindset when after I traded the course. Yeah. Okay, but in short, like I said, we have really, really amazing review from our graduates as well. So the course itself is on the 21st and 28th. We are going to have a special promotion for this course itself because, like I said, we really want to help more people to be prepared for this upcoming potential drop, okay, in the midterm. Okay, yeah. So like I said, we just want to make sure that more people join us before it actually happened, and also that we can be well prepared. So of course, together with the 8/8 special sale, we are going to have a one-off special promotion for this, okay? Because it is a one-off price drop, right? I can't really release it today. So if you are interested, okay, you can actually join us on the Tuesday event, okay? Because at the end of the Tuesday event, I will actually be sharing with you guys what is this pricing that we will actually be giving. Okay, like I said, this is a one-off event. So if you have yet to join us, okay, please do join us on Tuesday. If you're not able to make it on Tuesday, okay, then go to our Facebook, drop us a message. On Tuesday, we will just let you know what is the promotion. If you want to join us, then it will be a time-sensitive event. Okay, so if you want to take advantage of it, either you join us on Tuesday or you drop us a message, and then we will let you know the promotion on Tuesday as well. So with that, okay, advertisement got over. So now we move back to our Q&A. Okay, so right now, if you have any questions, feel free to type it in, and then I will answer your question, one by one. Thanks, Jackson, for the first question. Mind to share what is your plan on long-term stock midterm option, given that midterm might has major correction coming? Okay, so personally, for me, two things I will focus on. Okay, number one is for me, I tend to take a little bit more of a short-term trade right now. Okay, so I will spend a little bit more. Based on my portfolio I will allocate a bit more for short-term trade. But that doesn't mean that I don't have any mid to long term trade. I still have, like, for example, Tesla, New, all these company I still on holding. But I might consider taking profit along the way. I might consider taking more profit along the way as the price goes up. Or one of the things that we do is when a stock goes up 100%, we actually take half of it out and let it run. But I might consider to take everything out once it goes 100%. Okay, so the taking profit portion, I will be actually be a little bit more, I would say I'll be a little bit more intensive lah. Okay, to take more profit out, especially as the multiplier effect goes even higher. So I would say right now 38. Okay lah, I still see that it can continue to go up higher lah. Like I said, okay, let it chunk to the all-time high, which is 44. So we still have a little bit of room to grow. All right, but please don't use that as a benchmark. Like I said, really, if it goes above 44, I'll be really, really scared. Maybe I'll just sell off everything and just wait. Just wait for the crash to happen. Okay, and then I'll start shorting it. Yeah. So that's basically what I will do. But pretty much a lot of things will still depending on the market itself. I will still stay invested as always. Some people say, why not you just sell everything and then wait lah. But the thing is, you never know. Maybe this time round, right, the multiplier effect goes all the way to 50. And it could be another half a year or even 1 year of bull run. Okay, so you do not want to miss this opportunity as well. All right, so anyone has any other question? Okay, I hope that today's sharing is insightful to really share with you guys exactly. I mean, a lot of people have been asking so why does the share price goes up, right? Okay, again, it's just these two reasons. One is the business do better. Okay, number two is the multiplier effect is bigger. So if you know, so how do you actually make like 10 times, 20 times from the stock market? First, invest in a company before they even become successful. Okay, but again, this one is a little bit more challenging. Okay, if you're able to pick a company that right now, right, based on track record, the track record is not there one. But then the earnings is maybe they can make 10 times the earnings or even 100 times the earnings. So can you see the A multiplied by 100 times? Okay. And usually what happens when a company is not making money, right? The B, the multiplier is also very small. But the moment the company proves to be profitable, this multiplier effect will shoot up. So if you're able to buy these two, A and B, when it is super low, and then when it starts to realize it is true profit, okay, it's true value, that is where you can see your share price, going up like 10 times, 20 times, even 100 times. That is definitely doable. Okay, next from Xiongping, what is your view on Amazon? Okay, fantastic. So this is the time where I need to go to my trading view, Amazon. Okay, so remember now that I have actually shared with you these two criteria, right? Earnings as well as multiplier, I will say that I'm also going to use these two as a guideline as well, so that we can all use this and see how we actually view it. Okay, so first thing first, okay, so from a technical perspective, okay, previously, like I said, it goes up, but right now it goes back down again. So I would say that it could actually go a little bit sideways, okay, for now, at least for Amazon. Let's look at it from what I've just shared with you. Let's look at the company earnings first. Is this company making more and more profit? Actually, I know the answer is yes, but I just wanted to show you. So can you see for Amazon? Okay, let's look at the earnings per share. Let me just zoom in for you guys. Can you see? Okay, previously, like I said, this company used to be losing money and then it starts to become profitable. And then from 1, can you see? From 1, it jumps to 4, it jumps to 6, it jumps to 20. Now it's 41. So okay, so now remember the formula that I just shared with you. Imagine you bought it when the number is 1 and then now it's 57. So can you see the share price would have jumped, assuming that the multiplier remains the same, okay? But because the earnings of this company jumped by 57 times, which also means that the share price jumped by 57 times. Your $100 become $5,700. Can you see the power of this jump? All right. So definitely in terms of the earnings, Amazon is amazing lah. Okay, Amazon is amazing. Okay, that rhymes. The second thing we want to look at is the valuation, which I've mentioned earlier on, which is the B, the multiplier effect. Okay. So we can actually see that for Amazon, okay, why I know that there are people who still say that Amazon is a good buy right now, okay. I would say that one of the things is because Amazon, can you see the P ratio right now is 58. The multiplier effect is 58. It used to be the average over the last 5 years is 185. So which means that actually based on the multiplier, Amazon is still also below the 5-year, which is great, which is great. Okay, so based on these two company, based on these two A plus B, if you ask me C, is there any upside or not? I would say the answer is yes. Okay, the answer is yes. All right. But again, if you want to be a little bit more precise, then I'll wait for it to go back up above the green line. That is from a technical perspective. Okay. Next up, I hope with this, right, it gives you a little bit of a different view, okay, as compared to, I mean, I always show you the chart, but today I just wanted to add on a little bit of the fundamental as well. Damien, what do you think of crypto when major correction might crash? To be honest, I don't really know the correlation between stock and crypto, okay, but I would say that the money always have to flow somewhere. So when the stock market were to crash, okay, definitely money will flow to crypto. But again, remember, why the one thing that I don't really invest into crypto, right, is because crypto, the multiplier effect of crypto, like I said, is a question mark. Okay, it's a question mark. In fact, right now, the multiplier effect of crypto is super high already. Okay, and the next thing is the earnings, right? Okay, crypto, there's no earnings, right? Because it's just a number. It's not a business, okay? There's no real value for crypto itself, right? So that is the part where it makes crypto a little bit hard to evaluate. So for crypto, I will actually just simply look at the chart itself. Yes. So this is also something exciting. So I have also mentioned previously that I would say Bitcoin will actually trade sideways, but if you were to go up above or if you were to go below, you have to take note. So you can actually see that for Bitcoin, it has actually broke above the resistance. So I would say that based on an entry, I would say that there's actually an entry for Bitcoin. Okay, and of course for Ethereum, I do foresee that probably it moves the same way. I mean, if Bitcoin go up, pretty much every funny coin will also go up. Okay, so yeah, I do see an entry opportunity for people who are interested in the crypto market. All right, based on technical. Is gold a safe haven when the market crashes? Based on history, yes. Okay, based on history, yes. Okay, but will history repeat itself? That's a question mark. Okay. Yeah, like I said, it's the same theory, okay, as crypto. When the stock market crash, the money has to flow somewhere. So previously it's into gold. But this time around with crypto, you never know. Maybe all the money flow to crypto and then gold remain low. That's also possible. Okay, that's also possible. All right. But yeah, of course, like I said, it's good to diversify. Okay, like I said, when valuation is so high, put some money into gold, put some money into crypto. This is also a way of hedging against the drop in the stock market. Qing Yang, what is your thought on NIO and XPeng? Yeah, personally, like I said, for NIO and XPeng, I would say that because this is a high growth industry. So like I said, I do expect the A of this company to grow exponentially in the future. Right now, there's no data because like I said, all these companies are still losing money. But I do see that moving forward, okay, really, even in Singapore itself, you can see the takeout rate of electric the infrastructure, everything is really building up. Okay, it's really building up. And maybe in another 5 to 10 years, pretty much more than half of the new car is all electric car. That means all the car that you see that's selling right now, pretty much everything will be electric in another 5 to 10 years. And of course, really, if you look at the design of NIO and XPeng, right, if they were to come to Singapore, I would say that they would be a huge competitor to all the big brands like Mercedes, BMW, Audi, and some of the luxury brand. If the price is right, I would say that their price point and their market is actually quite huge, especially the China market is a huge market. So this is a bit more of the future. So I do believe in it. For the multiplier side, right, okay, so like I said, again, these are all relatively new companies. So the multiplier effect works only on company that is profitable. if the company is not profitable, there's no multiplier effect to look at lah. Okay, so for Neo and Xpeng, purely from a perspective, okay, I'm invested in it. From a chart perspective, okay, let's look at it lah. Okay, yeah, I do see that it is still going up lah. It is still going up lah. But again, like I said, when it goes up further, I might consider taking profit first. Okay, so all this trade for me, I used to be long term I mean I have a long term perspective lah. But right now maybe I would actually have a short to mid term, and then I will take profit and then wait for the thing to crash first lah. Because like I said lah, when the market crash, this stock will also drop lah. Okay, yeah, pretty much everything will drop. Okay, I'm going to take just maybe a few more questions, but I think y'all can stay on a bit later lah, because I see that the numbers are still pretty strong at above 100 lah. Will we be able to replay this session from Facebook as I will cut off? The answer is yes. So after I close off this Facebook live, right, y'all can actually go to our Facebook. So if y'all haven't go to our Facebook, right, please do go to our Facebook lah. Okay, help us to like our Facebook as well. Okay, the link is actually fb-ultimateinvesting.sg. Please help us to give us a bit more like lah. Okay, yeah, I put a link over there. Okay, help us to like. Yeah, so all the videos, okay, every single week, right, all my Facebook live, all the videos will be there. So y'all can see lah. Right now I'm actually live over here. The previous week one is also over here. Over here, yeah. So y'all can actually go and watch all the previous episode also. Okay, let me go back to the question. Yes. Okay, Peter, what about Baba and Tencent? Okay, so Baba and Tencent, okay, like I said lah, the company in terms of the multiplier is low. In terms of the A is great lah. Everything is great. The only thing about China company is just one more letter lah, which is G lah. Okay, government regulation. Yeah, but definitely from A perspective and B perspective, right? These two company is China company are very, very sexy lah, I would say. It is a very sexy to go in, but the regulation is something that's a different formula. Yeah. So again, like I said, nothing has changed for my personal view on China is that I do see that you can invest in China, but make sure that you portfolio size it lah. Maybe up to 10% or maximum 20% of your overall portfolio. Is it time to enter Tesla? Wow, fantastic question. $1 million question. Okay, yeah. Based on the chart itself, okay, as you can see lah, I have this yellow line lah. Okay, make sure that it stays above the yellow line lah. So right now you can see it seems to be coming down. So if it comes down further, it could go back down lah. But if you see a nice green candle, okay, nice green candle, something like this lah, this kind of length lah, okay, nice green candle, then I could see Tesla going much further up lah. But again, these are all relatively short to mid-term perspective lah. But again, like I said, Tesla is pretty similar to Neo and Xpeng. Like I said, all these companies are very, very high growth in the A. Okay, but the multiplier effect is quite high lah. Okay, so what you really want is that you want the A to really grow multiple times. So maybe now is the part where I can share with you a little bit about the A and B. So some people say that, wow, Bowen, I look at the B of Tesla, right? It is a bit high. So when I say B, I mean the multiplier lah. The multiplier of Tesla is a little bit high. So what happened if, let's say, the multiplier of Tesla drop by half? Okay, what if the multiplier drop by half? Then the share price is going to drop by half as well. Am I correct? Okay. Now, the thing is, why I would say that for all this company, right, unless your view is long-term. When I say long-term, I literally mean like maybe about 3 to 4 or even 5 years down the road. Okay, I would say you are pretty safe. Reason being is because assuming that the multiplier drop by half, okay, drop by 50%, but then your earnings, right, increase by 10 times. Okay, your A from, let's say we have a simple mathematics. I'm going to put in the chat. Okay, 2 times 2 equal 4. Sorry. Why did I type 2 times 2 equal 5? Okay, sorry. 2 times 2 equal 4. Okay, y'all follow me on my chat. I hope y'all can see the chat. Okay, just give me a bit of time. Let me put inside the comments so that y'all all can see lah. I want to let y'all see this. Okay, 2 times 2 equal to 4. Okay, so assuming this is just a number So what happened, right, is that assuming that for Tesla, the multiplier effect dropped by half. Okay, so the second 2 become 1. But my first 2, right, grow 10 times. Okay, so which means that it becomes 20 times 1. So can you see? Even though the multiplier dropped, but my earnings increased like crazy. My earnings increased by 10 times. But so can you see the overall number is still increased by 5 times? All right. So these are really based on company that, they have a very, very potential high growth in the next couple of years. Right. So like I said, the fluctuation of all these companies is going to be crazy. But you need to give it a relatively mid to long term view. At least I would say just put it at 5 years. 5 years down the road. So if you're looking into new, if you're those that you don't really care about a crash, okay, what you can do is you can just go and buy, and then basically you're waiting to hold it for 5 years. If the market crash, what is going to happen? Then you buy more. So your strategy is very different. If let's say you're a more passive investor, okay. So for those of you who are more passive, basically right now you buy, you're willing to hold and reap the reward 5 years down the road. And what happens if let's say the market crash? Then you just need to make sure that you got more money Then you buy When it drop, buy. Buy at the discount And then after that, 5 years down the road, you get all the reward together. Then you retire 5 years later So that's basically the plan Okay. So the answer is yes, you can actually buy and hold long term, and then along the way continue to accumulate I think for some investors, this is their strategy. So even if it crash just let it crash okay. Crash, you buy more The worst thing is it crash, you got no money. That's the worst case scenario Or for those of you who have limited capital, maybe you only got $2,000 to get started. Then also very difficult. That's where we need to learn how to short the market. So when it drop, you can make more money. And then when it recover, your capital now bigger, you buy everything cheap. Then you can also do very, very well. Right. I hope you understand what I'm sharing so far. Okay, let me go back. I think today a bit overrun. Okay, what's UI take on the dropping China tech stock? Okay, I already gone through. So I still say everything is good just portfolio size. Should wait for crash then enter the US index ETF? The answer is okay. Always stay invested Always stay invested Okay. Don't wait for crash to then you enter. Okay. Why do I say that? Is because if let's say now you never enter and then crash I can tell you during the crash you don't even dare to enter one. Yeah, because you have no game plan so always stay invested What about ARKK? Okay, same thing. I would say that ARKK, all the company you can see that they invested in, are all companies that they are betting the earnings to come in maybe 4 to 5 years. I think Katie Wood has always mentioned that she's looking at 4 years down the road. So now the share price dropped. She said, never mind I'm looking at 4 years down the road. So even if during these 4 years there's a massive drop, what she will do is she will buy more. That's basically what she will do. She will accumulate. So it really depends on your strategy. So if you're looking at short term, I would say yes, you can buy short term. But if you're looking at something that's mid term, 1 year, you want to make profit, maybe it's a bit hard. But if you're looking at long term, 4 years, 5 years down the road, I would say that you are pretty safe. Okay, so Baidu, same for all the China company. How about Fiverr? Okay, this one quite interesting. I haven't really take a look at it. Okay, so Fiverr from a technical perspective, they have a massive drop. Let's see what happened. Okay, the earnings is pretty okay. Okay, let's take a look at Fiverr from the A and B perspective. I haven't really looked at this company before. So let me just share. I believe they should be losing money. Okay, yeah. So as you can see, for this kind of company whereby they are still losing money, then you need to have a little bit more in-depth knowledge about this company. Like for example, if you ask yourself, 5 years down the road, will this company do way better than today? Will the company start to make profit? I think the first thing you need to ask is, can this company make profit? Okay, there are companies as they grow, they have no plans to become profitable one. That one is shitty company. Okay, so make sure that the company, how do you know that they're actually turning profitable? You can actually look at the cash flow lah. So for example, okay, this company, the cash flow was negative and then now it starts to turn positive. So that's actually one good sign that you can actually see that they are improving in terms of the profitability of the company. The second thing is in terms of the margin, is the margin increasing? Okay, because as the margin increase, it means that their conversion from revenue to profit is also better. All right. So yeah, this one you really need to understand a little bit more about the company lah. But personally for me, this is not an area whereby I'm very familiar with. Okay, so I'm probably going to avoid. But if you understand the company, you see that 5 years later, company is going to make a lot more money lah. Then yes lah, again, like I said, you can buy now and then hold and reap the reward like 5 years later or 10 years later. What is the online marketplace? Okay, yeah, all this you need to have a more in-depth analysis lah. So again, I'm not an expert in every company, so I only go for industry that I personally am more familiar with lah. Okay, Palantir, yeah, same thing lah. Actually, it's the same lah. Palantir is also not profitable. So if you believe in the technology, if you believe that with more and more of the big corporate, all the FBI and all that are using their technology, if you think the technology is going to revolutionize the world, then yes lah. So this kind of company, right, whereby they are not yet profitable, to be honest, you need to, there's also a little bit of risk lah. Okay, because either you are very, very familiar with this company, or I mean, if you look at YouTube lah, pretty much every one of them will tell you that it's good lah. But then sometimes the numbers doesn't show the truth lah. Okay, people say that this company 5 years down the road confirm do well one, but you look at the numbers, the cash flow, everything doesn't make sense. So again, the valuation for all this company, right, is also not the cheapest. So maybe you can wait. Okay, maybe you can wait. Yeah. Okay, Pfizer. Interesting. I have not exactly looked at Pfizer lah, but in short, actually without even looking at Pfizer lah, for me, right, I stay away from pharmaceutical company. Okay, I stay away from pharmaceutical company. A reason being is because it's highly fluctuative based on their drugs development. Okay. So definitely, right, okay, let's just look at Pfizer lah. In terms of the multiplier effect, is it going to be low or high? The answer is definitely it's going to be high. Because why? The market sentiment for Pfizer confirm is high one. Everybody knows that they are making all the vaccine. So pretty much people is going to price it much higher. That's why the multiplier effect is going to be higher. All right. So if you ask me, now we come back to A. So again, the B, right, I would say it's maybe on the higher side already. Okay, the B is on the higher side. Okay, the A, can they continue to make more money? I think it's pretty obvious lah, and maybe I would say if COVID vaccine become a norm, whereby we have to take this every single year, we have to take the jab 4 times a year for the rest of our life, maybe they will make a lot of money lah. But if let's say they come out with a drug or some other company come out with a drug that literally just fix this issue, then you can see that the impact on Pfizer will actually drop. So again, like I said, there's this kind of risk law, like because it's really unknown. Okay, yeah, some other companies might just come out with a drug whereby you only need once a year. Pfizer, you need maybe 3 times a year. So people will choose the once a year lah. So what happens is that nobody will order from Pfizer and then the price will drop dramatically. All right, so there's just too much uncertainty from this kind of one-time event. So for me, I will avoid lah. What 2 to 3 stock to look at for the short term? Okay lah, this one you have to look at technical analysis lah. Okay, but today I didn't really go through the opportunity. Okay, so next week I'll go through some of the opportunity for short term. Okay, like I said lah, one of the one that I shared just now is Bitcoin lah. So if you want, you can go for Bitcoin. All right, I think today a bit overrun a lot lah. Okay, yeah. So I hope you all are learning something so far. Okay, today very, very interesting. Share with you. Earnings times multiplier give you the share price. So remember, if you want the share price to go up, first the company must make more money lah. Secondly, don't buy when the multiplier is too high. Okay, although to some it seems like very common sense lah. Okay, but again, right, it boils down to emotion now. Why does people want to buy when the multiplier is high? It's because everybody is telling you that you can make money from the stock market. Okay, when multiplier is low, I can tell you that's where the fear is super high. Everybody tell you, hey, wow, the market is like last year lah, okay, when the COVID happened, right, everything, when the multiplier dropped to very low, right, but you realize at the start nobody there to buy, okay, until when the stock market starts going higher and higher and higher and higher, then people start to realize, wow, I actually can buy, I should have bought. Yeah lah. So again, what goes up must come down lah. That's for the multiplier. What goes up must come down. So now it's at 38. Remember the number that we want to, the resistance for multiplier for S&P 500 is 44, around 44 lah. So I would say still got a bit of room for the multiplier effect to grow. So short term, like I said, I do see the market will continue to go higher. But like I said, in the midterm lah, maybe I would say in the 6 month to 1 year time, really have to be careful lah. Okay, 6 month to 1 year time, not too long not like my midterm is not 2-3 years. Okay, it's literally like maybe a few months to, I would say within the 1 year lah, within the 1 year mark lah. All right. So if that really happens, right, are you prepared or not? I think that is really something that we need to ask ourselves lah. Okay, I know already, there are many people who are suffering. Because of the COVID. So they thought, okay, maybe if I invest in the stock market, I can literally stop working lah. And then after that, they put all the money in, and the stock market crashed. Wow. That's the worst that can happen. So make sure that you stay you stay not invested. Okay, you get the knowledge lah, and you know how to do when the market really crashed. All right, with that, I think I want to end off today's session. Okay, so next week, don't worry, we will see you again next week, next Sunday, 9 p.m. Okay, I think next week is going to be more exciting. Probably going to share with you more short-term trade for next week. Okay, a more short-term trade for next week. And I would say that maybe for next week, I'll prepare a list of company that I believe that will grow 10 times, okay, in 5 years down the road. Okay, so these are companies that you can buy now, and then 5 years down the road, then you reap the reward. Okay, I'll probably look into some of the companies like that so that you can buy and forget. All right, thanks everyone for joining me this session. And of course, don't forget to help us to like and share. Okay, also invite your friend to join us next week. So hopefully next week we can reach 150 people. This week we have about 100 plus people, so not bad. So let's see if next week we can reach 150 people. Okay, if not, most importantly, okay, everybody do stay safe. All right, do stay safe, invest safe. And then next Tuesday onward, y'all can go already. Okay, so hopefully there's time we can have coffee next time. Okay, outside. All right, with that, thanks everyone, and good night. Bye-bye.